Stock market, we're going to look at analysis and our projections on the S&P 500, but this is some important information. Please just take a moment and look at this slide, and it gives you some information about how we approach the markets and how that is important to you. This is the stock market review for the week. We're going to look at the 1 to 3 month view of the S&P 500. Now, the S&P 500 SPX has been very strong based on being pushed up by the AI stocks as that index is heavily weighted by Apple and Microsoft. And so it's also benefited as the NASDAQ has done so as they've moved up pretty sharply. We, in the beginning of the show, mentioned that we thought that the S&P 500 would continue to move up as we have had an upside projection of 4,300 to 4,360 for this year, and it's quickly getting up to that level. In fact, it's just only 35 points from our minimal target there right now. So this has been following the intermediate patterns absolutely beautifully. During periods of very strong upside momentum conditions, often the pullbacks that we look for don't get down to our projections that we had, and that's happened recently because the upside move in the AI was so strong. It's prevented some of the deeper dips that we have expected. In fact, they have been much more shallow than what we thought were the highest odds. And our analysis is probabilistic, so we just simply mechanically look at what we think are the highest odds, and that's what we share with you. And that's what I did at the beginning of the year when I suggested that this would be a bull market year. Now, again, if you go back and watch my end of the year reviews, I talked about the S&P 500 and the stock market being in a bull market that is a cyclical bull market this year that lives within a secular bear market. That's a pretty bold call. Not many other people are out there making that call, and I still think that's the case as the stock market has followed our intermediate patterns pretty brilliantly. Let's take a look here as we look at the S&P 500, and then we're going to follow that up by looking at the market condition monitor. So this is the S&P 500 looking at the weekly chart, and I want you to see in here in the bottom, if you're brand new, these are cycle brackets in here, and these just simply help us see the rhythms in the market. This cycle right over here was a little longer than this cycle right over here. There is a normal variance in the way these lengths of the cycles move, cycles measured from low to low, or trough to trough, as we say. And on our charts, which often look very busy to people that are not familiar with our style of analysis, we have a ton of information. We put in the supports, the resistances, the projections, and then what we do is we revise them based on what is the new data that we get all of the time. That previous slide that I asked you to read is all about the nature of our analysis, and you can continue to learn our analysis by becoming a member at askSlim.com. So if I just look at these last couple of cycles right in here, you can see what we're projecting in here is that this upside move continues here out into July or potentially into August. There are two different upside projections in here. This is the 4,300 upside projection, which is the major 61.8% upside retracement of the entire bear market. And this right over here is the target zone from the Fibonacci extensions that come off of this cycle right over here. So that's the 4,300 to 4,360 area that we were looking for as an upside target in the market. Now, I talked about in the beginning or earlier in the show that it was fairly likely that there would be some period in June that the market struggled a little bit. That is the minor cycle that we see right in here, in this area right there, where it's likely to have some kind of a pullback. But you see, we're only looking for a modest pullback in here. This is the 23.6% at around 4140, 4150. That's not much of a pullback, 100 points in the S&P. And if this gets higher in here, so will this target over here. Remember, we do this mechanically. Why do we have this pullback in here? Well, it's this minor cycle that you see right there. And these two cycle lines you see right there they're 3 bars either side of the ideal is what we look for. And that means that you could get a pullback here into mid-June, or you could get a pullback here into early July, and then beginning to move up again and towards our targets again. If you look at this mid-cycle low, as we call it, or minor cycle trough, the same thing happened right over here, where it was very strong, and then all of a sudden there was a few weeks that were hard on the downside. It hits the support zone, actually gave a couple of double hammers right over there, and then began to move up. You can see in here where the reversal scout, which is our momentum indicator on the weekly, turned down. And then once it resumed on the upside again, it was good. Then it corrected again. You can see in here when it turned up, it told us the market momentum was strong. And you can see in here, it through this whole period, even in these hanging men here on these candlesticks, it has not given any downside at all. That momentum has remained strong. That's in alignment with our intermediate projections. It's also in alignment with the fact that this pullback right in here may be quite shallow. Again, maybe only 41.50 down to this area, and then beginning to move up again. This is into early July. This is into late July, early August, and even up here potentially in towards September. And then you can see this period over here. That's when both of these minor cycles and the dominant cycle are coming down. And those yellow areas are the periods of risk. You see January, April was one, and then you had that pullback right over there. If I look at this going back a little further on the chart, you can see in here that there was this period of risk last September, October, where we thought the market would come down sharply, and then it did there also. So those yellow areas where the big period of risk are, and that comes out over here in the typical September and even October area, where you could see the timing lines, cycle trough lines right there coming to the downside. So we don't see a lot of big risk in this market until we get out into late August through sometime in October, which is the typically weaker period for the stock market. So we're still looking for our 1 to 3 month view as the market having only minimal pullbacks, maybe 41.50, and 4,300, our target for the year, should be pretty easy in here, potentially up to that 41.60 zone. Let's take a look at our market condition monitor. There's the market condition monitor right there, and I'm just going to move up here. We're looking at the intermediate view right over here. This trader dial is essentially this, you can either look at the time frames or the trader view. We're going to start out looking at the intermediate because that's what we just looked at. And you can see in here looking at the 4 indexes, the SPY, the QQQ, and the IWM. The SPY is very bullish, as is the QQQ, you can see SPY turned very bullish on May 17th. The QQQ turned very bullish on 5/31. The reason that was later was because the monthly pattern was negative, but now that has caught up and that turned to the upside. IWM now has just turned on the intermediate term slightly bullish, and the Dow remains slightly bearish. Let's just look here as we switch from the intermediate term to the short term, and you'll see how these things are really changing in here and how important this is. The IWM just went from neutral to bullish in here. As you can see, that's improving on the short term. You had an uptick here that just happened on June 1st in the Dow to neutral. These were the more negative ones. And of course, very bullish on the SPY since May 26th and May 25th on the QQQ. That's for the short term, and that's really looking at weekly, daily, and 2-hour charts is what that looks like, and our algorithms are built in there to give you those conditions. If I go to the near term, and that's as far in as we're going to go right now, you can see how these things have been changing in here as today on the June 2nd for the near-term traders, and this is for really 1 to 5 day swing traders, that kind of trader. trader, you can see that the diamonds, the Dow has now turned bullish, the IWM has now turned bullish, and the SPY and QQQ are now very bullish. And I believe that you're going to see this QQQ start to lose ground. That's what we want to do, is to really get a sense for how that potentially is changing. So if you were a near-term trader, that's a short-term kind of swing trader, that's the kind of information that you would use. That's the market condition monitor on the trader version. If I go to time frames in here, you can see that what we're looking at is the reversal scout and the slim ribbon, and we're looking at the 2-hour chart right there. Let's just look at the daily, and you can see in here that this is the daily, looking at the reversal scout and the slim ribbon, and you can see the Dow is still a laggard right in there. And when did the SPY turn bullish? Well, that was a reversal scout May 17th and the slim ribbon May 5th. This has been in bullish condition through this whole period. That's why we've been really bullish on top of the cyclical patterns that suggested that only the pullbacks would come and then the market would move up again. But this is why the pullbacks were so shallow in there, in the SPY and the QQQ. And even the IWM has now turned far more positive. So the diamonds are the big laggards right now, and I think that potentially is going to change. Just a quick look here at the SPY. If I click on that, you can get all of the time frames right in there. This is just a remarkable tool that you can use, and you can see in here, looking at the SPY, going all the way down to the 3-minute chart. Look at that, all green. For every different style of trader, this has kept you on the long side. Just absolutely remarkable. This is a great tool, and you can have this tool absolutely for free if you just become a PSP member. Our askSlim Premium Service Preview is here. You can see the market condition monitor and all of our charts, and just a huge amount of things that are on this list by just becoming a Popular Services Preview member. If you go to the top of the askSlim.com website, you can click the sign up button at the very top of the page. There's no credit card. You just put in your name and email address, and you're going to have access June 5th to June 16th to all of this amazing content. And if you click that sign up button, you go down there and you'll see all of the list of everything with descriptions of everything that you're going to get absolutely free. Why do we do this? Well, we want you to really see what we offer. We have this broad amount of content which is really valuable to you, and there's no way to really know it without really seeing it. So we're going to just give you all this for free. You're going to get our Future Speak show for free for the next 2 weeks. All of this, just amazing. Please go click that sign up button on the askSlim page, and you will learn everything that is there and get a great peek of the amazing work that this team of analysts does. You have questions, write to Matt at askSlim.com, and he will be able to help you.